Welcome to Invest. We talk about investing, finance, and professional development. As a recording time of 9:30 a.m. exactly on Jan 3rd. Hope you guys have a good week so far. It's the hump day in the US at the moment right now. With respect to Ethereum, currently down about 7% so far at $2,206. But across the spectrum, if you look at the market front, we are relatively red at the moment right now. And this is not just for the crypto side, but also for the equity side, which we'll dive into a little bit more. But you can see that with respect to Bitcoin and Ethereum, at the moment right now, we're down about 7% respectively. And the altcoins have the house is down even more dramatically, which, let's take a look at why, right? On the media front, you could see that, there has been news that's been kind of percolating the last 24 hours, 15 hours so far, indicating that SEC requires more time for consideration to approve the spot Bitcoin ETF proposal. So, with that fear mongering type of news, it obviously will drive the market to go down from here. But the validity of the news is still, non proven yet. And this seems like to be some sort of like a rug pull type of scheme that we're seeing right now. But ultimately, investing is about risk mitigation. Investing is about reading the technicals and also understanding and believing in the fundamental for this business, for this investment long term. So this news might be a negative one, but it can present a good opportunity for us to risk mitigate and invest more thoughtfully by dollar cost averaging at the right respective level, which we'll dive into it a little bit more. Again, if you want to have my more specific coaching, feel free to subscribe to our Patreon, and I'm happy to give you my guidance. It's at the link below. So let's dive into the technical real quick. All right, that's the recording time of 9:32 a.m. on Eastern time. And as you can see, I'm really trying to make an effort. It's my third video for this year. I know last year I was a little bit absent, so I apologize for that. But this year I want to make a real effort of doing so. So let's just dive into it without wasting more time. Okay. So you can see that right now we are at the 2200 mark, down 7% for Ethereum. And why are we at this level? It's because this is a level that we've formed as a support prior from the point of November to the December last year before the elevations, which was basically driven by Santa Claus rally combined with some, normalizations of the news that you saw across the spectrum. But the question is right now, where are we going from here? Are we going to see further sell off, knowing the fact that we're down 7%, or are we going to keep going from here? So we could kind of use the color coding system that we've been talking about for quite some time now to kind of go through this, and we can do this together. So at the moment on a daily, we have crossed down, right? So with the 46.10, and you're on the right side of the spectrum. So this is indicating that we have cooled off a little bit more, and we're more of the moderate median risk level. Take a look at this on a weekly. Very extended still at the 60 out of 70 with this large whale hump. This looks like a dolphin with the mouth closing in, right? And eventually this will require a death cross, which is basically the yellow line crossing down the blue line, saying that we are foreseeing and foreshadowing more of a level down in a weekly perspective. And on a monthly, you are also on the wrong side of the spectrum. You see that the yellow line is also on top of the blue line. So you do need to kind of cross down from here at 55 out of 70. So if you use the color coding system, let's take a look at it, right? Monthly is more of like a tangerine orange, right? Again, of the color spectrum of green, yellow, red. Red means you want to be more cautious. Green means like it's a good opportunity for you to get in. So monthly, I was, if you look at the color coding spectrum, I'll give this like on a risk profile perspective. Monthly is like a tangerine orange. Weekly is like a red, like just like an apple red. And then also with respect to the daily, you are at a relatively yellowish green. So if you mix that all together, this is kind of like light orange. It's not the best level, but it's not the worst level to be getting in because lower level will be coming. You could see that we're kind of foreshadowing at the 2000 already. But a more logical level to be getting in will be presented at the weekly. You could see that the red line we've drawn so far, if you were to complete the revolution, would be somewhere around like the 1950, 1850, and 1650 respectively. Bitcoin is like even more extended, right? Look, using the color coding system, daily is a little bit more, uh, I would say moderately risked, and you could see that we have pumped up to the 46,000 and we have gave up everything, and we also almost broke the 40,000 at one point, which you kind of immediately got bought up mostly by, I would say, electronic trading system. But using the color coding system to not like confuse ourselves, daily is again like a yellowish green because of the cooldown that we've had. You try to go up, but you got rejected from here because you can see we try to get a golden cross, but we didn't make it through. The weekly is also extended at 65, so this is more like a red, right? And then last but not least, on the monthly, you're also in the red. So if you mix that all together, this is like just a red color scheme. So this tells you that Bitcoin's quite extended, not the ideal level to be getting in. On the SPY front, you could see that we kind of called it, ever since last year that we're going to reach all-time high. If you look back to my videos like months ago, this is something that is not a surprise to us. But looking at the color coding system, like, is it a good time to be buying stocks right now? The question is, on the monthly, you are quite extended, right? At 62 out of 70. So the answer is this is red. Weekly is also mega red at 65 out of 70 as well. And then daily, it's still kind of in the deepish orange at 60 out of 70. So across the spectrum, equity market quite extended, not ideal for you to be getting in, right? But where would be a good level to be getting in back in? I would say somewhere around like the 455 when it be becoming more consolidated. I wouldn't even touch it until like 460. So which means we do have some correction to be coming, in the near future, which is very sensible and logical from here. So hopefully this makes sense. It's nothing to be fear about. This news is more like fear mongering. I mean, it's not the end of it, right? The SEC works in glacier pace, and it takes forever to, for them to pass anything. And I work in the institutional capital space, and I work with the government sometimes as well. They just, the internal organization is sometimes just like very convoluted, and there's a lot of, basically chefs or cooks in the kitchen. So it takes through a lot of different hurdles before you get everything passed, right? So especially for something like crypto, which is, such a large market in place, and also there's like a financial incentive in place as well. It's just gonna take some time. But with respect to this news, my gut feeling is that this is just fear mongering. And the timing of this news is also quite interesting, knowing the fact that we've been quite extended so far. This is like kind of like a rug pull from the whales, if you may. So we just tell you something that this might be a good opportunity for you to be getting in rather than being fearful, if that makes any sense. So appreciate you. Have a good day, and I'll check you on the next one. Take care. Bye.